Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bearish scenario on the daily time frame, where we're looking for a zigzag to the downside in a 535, where the common target area for your wave C is between the 1 and the 1.236 trend-based fib extension taken from the high to the low of A to the high of wave B, giving you a target area between a 54.6k and a 50.5k. The invalidation for this scenario is price taking out the high at 73.8k, and preferably this wave C is ending after the 0.382 sitting on the 8th of June. This fib time is taken from the start to the end of A to the end of wave B, comparing wave A with wave C in time. The bullish scenario is an impulsive structure to the upside, counting a wave 1, 2, 3, 4 and one more leg towards the upside in a wave 5. The common target area for your wave 5 is between the 1.236 and the 0.618 on my chart, 73.3k, 75.8k. Because wave 1 and wave 3 are quite similar in length, there is the potential for a wave 5 to be the extended structure, meaning it is the longest, strongest and most impulsive wave out of this 5-wave impulsive move, where then the target is the 1.618 trend-based fib extension taken from the low of 1 to the high of 3 to the low of 4, giving you a target at 91.3k. Preferably this wave 4 is ending after the 1-to-1 fib time, taken from the start to the end of wave 2 to the end of wave 3. You can see that the low here has been made before the 1-to-1, meaning that preferably in this wave 4 we continue this range sideways without hitting the high of wave 1, as that is an invalidation in this scenario. You can also see this volume profile on the chart and price now ranging below the point of control. This range so far has been very interesting. Of course, we've been in this range for quite a long time already, and this point of control was acting as a bit of support, price moving to the upside again, point of control acting as support once again, but we are ranging below the point of control here. At least, that is, if we put the row size of the point of control to the 148, we're below the point of control now. 300, still below the point of control, but look what happens the moment I switch it to 500. You can see that then the point of control is still below price. So we are pretty much between the two high volume levels. We have a point of control just above and just below price, and if we do lose this point of control here at 67k and retest this, it increases the probabilities to move to the value area low sitting at 62.3k. If we then zoom in to the 1 hour time frame, this structure to the downside is very important for the probabilities on the higher time frames. This move to the downside is either a wave C, a wave A, a wave 1 or an unfinished 3-wave structure. Now let's go through them one by one. If this is a wave C towards the downside, it has to be part of a flat. You can only have a wave C in a zigzag A, B, C wave structure, or in a flat A, B, C, where your wave C is at least a 5-wave structure. Of course, in a triangle, it can be a 3-wave structure. So here we look for a 5-wave C to the downside and then a flat A, B, C. However, wave B hit the 1.618 Fibonacci taken from the high to the low of your wave A, which is a rare target for a wave B, and therefore it reduces the probabilities that this move to the downside is a wave C. Now then let's talk about an unfinished 3-wave structure. If this is a finished 3-wave structure in either an ABC or a WXY, then you actually want to see price hit the 0.618 trend-based fib extension taken from the high to this low to the high over here. The 0.618 is a minimum target for a wave Y and for a wave C as well. And for a wave C, the 0.618 is even a rare target. But what you can see is that price did not hit the 0.618, reducing the probabilities that this is a finished 3-wave structure. If we then think about a wave A or a wave 1, which is in the bearish scenario, right? We're thinking about either an A, B, and then a wave C to the downside, or a wave 1, 2, and then a bigger wave 3. We want to see this low broken here at 66.2k. So with this information in mind, pretty much the only bullish scenario that can really work without counting this structure as a wave C would be a triangle. In a triangle, we're looking for a 3-wave A, a 3-wave B, a 3-wave C, a 3-wave D to the upside, and then eventually a wave E. All of these structures should be zigzag family structures, where 4 out of the 5 waves here have to be a simple zigzag. ABC to the upside or ABC to the downside. If one of the waves is more complex, it is generally wave C, most commonly, or wave D, and then a double or a triple zigzag. In this case, in wave C, we are then counting a double zigzag, a wave W, a wave X, and a wave Y, meaning a 3-wave ABC in W, any corrective structure in X, and another ABC to the downside in your wave Y, where preferably the low of your wave C is finished, and we are now looking for a zigzag structure to the upside in your wave D. The common target area for your wave D is between the 618 and the 786 Fibonacci, taken from the start to the end of your wave C, giving you a target between 69k and 69.7k. The 0.5 at 68.6k is less common, and the 886 is also less common at 70.1k. And we do have some resistance in this area, the blue box here between 69.5k and 69.7k. After wave D, we then want to see another simple ABC 535 to the downside in wave E to finish the triangle and continue towards the upside. The invalidation is price moving below this low at 66.2k or above the high at 70.6k before your wave E is finished. The bearish scenario is a leading diagonal to the downside, and in this case we are counting this structure here as a wave A. So here what we're looking for is a 3-wave 1, 3-wave 2, then eventually a wave 3, a wave 4, and a wave 5. All of the waves are also 3-wave zigzag family structures. The common target for your wave 3 is between the 786 and the 886 trend-based fib extension, taken from the start to the end of one to the end of your wave 2, giving you a target between 66.1k and 65.5k. Preferably, price doesn't hit the 1-to-1 at 64.9k, as that would reduce probabilities for this scenario. After wave 3, we look for a 4 and a 5, which then finishes a bigger wave A or 1. So this becomes a leading diagonal. Look for a 3-wave corrective structure to the upside in a B or 2, and then continuation to the downside in a wave C or 3. The invalidation for this scenario is price moving above the high of wave 2 at 70.6k. Inside this wave 3, as mentioned, we are then looking for a 3-wave structure to the downside, where this is now counted a wave A, then we have a 3-wave B, and we look for a wave C to the downside, a 5-wave structure, 1, 2, 3, 4, and eventually a wave of 5. The invalidation for a 5-wave structure here towards the downside, an impulse 1, 2, 3, 4, 5, is price moving to the upside, taking out this low here at 68k, because in an impulse you don't want to see overlap between a wave 1, which is this structure here, and a wave 4. The target for your wave C is between the 1 and the 1.236 trend-based fib extension, taken from the high to the low of A to the high of B, giving you a target between 66k and 65.1k. Looking at the CVD divergences, we do have some bullish but also a bearish CVD divergence on the chart. Yesterday, during the live stream, we observed the bullish CVD divergences here, and these played out as price took this high. Overnight, price came to the downside, creating some more bullish CVD divergences, but as you can see, it is a second divergence with the pivot low. And that is important because the more often you have a divergence with the same high or low, the lower the probabilities of it playing out. So that is something we have to at least keep in mind. The target for this bullish CVD divergence is price taking out the high. The bearish CVD divergence is more local here, lower high on price, higher high on the CVD, which you can see here on blue. Lower high on price, higher high on the CVD, a bearish CVD divergence, and the target for this divergence is price taking out this low. We have some local support. We have this blue box here between 67.4k and 67.1k. In particular, we have two levels here, which is the daily naked point of control and the monthly naked point of control. And this is the point of control, the highest volume traded level of the previous month. 67.3k, 67.2k. If we then go to the probabilities of the different scenarios, then at the moment the probabilities are actually pretty neutral as we continue to observe the local range on the lower time frames over here. If price moves towards the upside and hits 68k, it will give at least a little bit of probabilities to the bulls. If price can also hit 69.5k, then the probabilities will be for the bullish scenarios. If price moves to the downside and hits 66.2k, taking out this low, the probabilities will increase for the bearish scenarios. And if price can also hit 65.5k, which is this high, the probabilities will significantly increase for the bearish scenarios. A side note is that for the triangle, you want to count impulsive structures to the upside from the current low on the lower time frame. Either an impulse 1, 2, 3, 4, 5, a diagonal 1, 2, 3, 4, 5 correction continuation, or a double 1, 2, 1, 2, 1, 2 strong continuation to the upside. This impacts the probabilities on all of the time frames. So what's happening locally at the moment is very important for the probabilities on the 4-hour time frame and the daily time frame. So I will cover this in more detail in the live stream later today. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.